Hey everybody, Economic Ninja here. I'm gonna do something interesting today. I'm gonna put together two news articles right here. And what it is I'm gonna do a news article that is expecting a lower print from the payrolls. And now that the payrolls have come out, we're gonna talk about how they were surprised to the, let me just go in for it. Okay, I'm gonna start with this first story. November payrolls preview. A miss will be good for stocks, but a huge miss means a recession, all right? So let me explain this story. This story came out this morning, but earlier this morning before the actual payroll print came out. Okay, it says the jobs print for on Friday is the final big event in what has been a very hectic macro week. Consensus is looking for an over 200,000 print, which is down from 261,000. All right. With plus 0.3% average hourly earnings month over month, which would be down from 0.4% prior. Okay, so they're looking for fewer jobs created, essentially. I'm going to make this really basic, and less wages per hour. Okay. The unemployment rate is expected to remain unchanged at 3.7%, while the labor force participation rate increases modestly to 62.3% from a 62.2%. So nothing really there. In its full preview, Goldman forecasts reflect continued declines in online job postings as well as weakness in big data employment indicators in November. Nonetheless, layoff activity outside the tech remains muted, and Goldman believes that the recent increase in jobless claims mostly reflects seasonal distortions. All right, so let me explain what they're talking about essentially. They are expecting less jobs to be created and lower wages. All right, now this was let's say 4 or 5 hours ago from the making of this video, and I'm going to be putting this right on. Okay, so now let's go back really quick. Let me do this real quick. I'm going to in live time, real time, as live as it could be. I'm going to go to the story that actually released the print. All right. Now, before I start this, to see, the Federal Reserve is looking at all these numbers, right? They're trying to figure out what they need to do with interest rates, the Fed funds rate. And the Dow Jones and all the indices just skyrocketed yesterday because they're saying, hey, the Fed comes out and says, hey, it looks like we could be starting to slow our rate of rise, right? They're not going to stop raising rates, but we could slow our rate of rise. So instead of 75 basis points, we could do 50 basis points or 25 basis points as soon as this month, December, right? So the stock market's rallied. Well, the thing is, the Federal Reserve is watching all of these key indicators. They're watching payroll reports. They're watching job reports. They're watching, what's going on, the health of the mortgage industry. Have asset prices cooled off, right? They are looking at food, even though they they don't want to, because that's the real indicator. Food and fuel is a real indicator, and living expenses of inflation, but they're looking to see if prices are coming down, right? And if they've done a good job by smashing those things down with rising interest rates. The problem is they also know that if they're also looking to see if unemployment increases. If unemployment increases, then they've made their case. They go, okay, we can now lower rates because people are going to be screaming, yelling, you're killing our jobs. Please help us, Fed. And then Daddy Fed comes in and goes, fine, we're going to lower rates. We're going to print more money and all that kind of stuff. And everybody's like, yeah, happy again for another 7 years. But we are coming to the end game of this Federal Reserve regime. I know it sounds crazy, but we are. So right now, everybody was expecting, okay, these numbers are going to be bad. So, less jobs are made, payrolls are going down, dollars per hour are going down, earnings. So that means the Federal Reserve is for surely going to lower or raise rates less this time. So it give more market exuberance. So here's the numbers that just came out. November payroll unexpectedly smashes expectations as hourly earnings jump. All right, now check this out. So this right here, what I'm about to read you, is going to cause the Fed to go, oh, we haven't done our job yet. There's still more jobs being made, and there's still, increases in payroll, which we need to do something about it. We've got to try and bring this down. We've got to try and tame inflation down, right? Because the more people that have jobs and the more money they're making per hour, they're out spending money in the real economy. The velocity of money is moving, and it's going to cause prices to still go up. So this is what I expect traders to start looking at and going, oh crap, the Federal Reserve is still going to have to stay serious about these interest rate hikes. It says it was supposed to be the lowest payrolls report since December of 2020, and it was, but not how the market expected. With consensus expecting a 200,000 job print, Virtually nobody, not even Goldman Sachs, expected a beat. And while we did, in fact, get the weakest print since December of 2020, the report was a surprise beat to the upside of expectations, coming in at over 263,000 jobs. This was a huge beat to the expectation of 200,000, and just barely a drop compared to the upward revised 284,000 last month. So this news story is developing. I'm putting it on YouTube as soon as I can right now. And if you like breaking news like this and information when it comes to business and finance, please hit the subscribe button. But I want people to understand that this is going to put more pressure on the Fed to continue to raise interest rates aggressively. All right. These are the kind of things that the market does not like. And I don't even know what the market's trading right now. I'm just putting this video up. Let's see what happens today. But this can't be good for the markets ultimately unless they spin it some positive way. But it will continue to be good for gold. All right, guys, that being said, I thank you so much for watching the economic. Oh, I'm going to link these stories below so you can see both of them and compare them, okay? With that being said, the Economic Ninja is out.